Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is January 23rd, 2015. Closing in on the first month of the year, being in the books. Earnings are fully underway. We got some misses, got some surprises, got some beats, and overall, this week for the market in general has been pretty darn good. Particularly yesterday, we got that 30-plus point rally that took the market right up to almost making a higher high on the S&P 500, but no cigar. You can see here, all it had to do was, get to that 2064, and obviously we're coming in up on the final hour of trading. So yeah, maybe it rallies 9 points and we get over that 2064 level. That'd be great going into the weekend. Probably though, after yesterday's rally and everything, we probably won't see that. So we have 4 days though above some of the short-term moving averages, like the 5-day and the 10-day. So we're holding those strong. We've tested the 5-day moving average for every day of the last 3 days. Not today because we're so far above it, but the previous 3 days we tested and we held it. So very positive signs that this market may be doing a little bit more than a bounce. What do I personally think? I think it is probably more than a bounce. When the market's trying to get bearish, okay, it can bounce a couple of days. It can bounce pretty hard for a couple of days, and that's what we saw back earlier this month when we looked like we might be getting out of the worst of things. But now we have a reference point that it's my cell phone going off here, so let me mute that. Updating us again. Yeah, so the S&P 500 it has a reference point, a price point here at 1264. That 1263, but if it hits 1264 and closes above it, that's your higher high. We didn't have that before in January. It would have needed to get all the way over 1290 to feel a little bit better with this market. So it wasn't so overly surprising when we all of a sudden started selling off again, and in that case, 5 straight days. So we got 5 straight days down. Now we got 4 straight days up. Does that mean now we're going back down for 4 or 5 days? No, I don't think so. I think obviously there's some time left in this market for it to really cause some problems for the bulls. But if you look at this 30-minute chart here down in the left-hand corner, you'll see that you got a pretty good trend line in place. So it could come back even further on the day, and it's not going to threaten this trend line at all. So we're at 1255 right now. We could close at 1251 and still be okay. Get below that, then okay, the 30-minute trend line is broken. That now, just because a trend line breaks doesn't mean that it's all of a sudden a bearish trend in place in the market. Far from it. When you have a break of the trend line, what that typically means is that the market's not bullish as it once was. So this is pretty bullish here on a 30-minute chart. Okay, it's pretty much straight up. Very little in the way of retracements and such. Just because you break that doesn't necessarily mean that the trend's over. I think for the trend to be over, on the 30-minute chart, it would need to get below 2022. So that's about 23 points away. Instead, when you break the trend line, what you're basically doing is the trend line's flattening out some. So what you could end up having is, I'll try to draw some lines here. You could have the market pull all the way back, say to here, and then bounce again, and you have a different trend line that should be followed. So it's not going to let me. I was going to try to draw what I meant by a new trend line there, but in any case, you get the gist. So then your trend line would be something, if I can do this without messing up all the lines, then your trend line becomes a little bit flatter. It's still bullish, but it's just it's a flatter bullishness, and but one that should still be respected. So just because we break a trend line doesn't mean that the upward momentum in the market's done. It just typically means that the bullishness is not as great as it once was. Glad I was able to get through that. I might have confused you guys more than anything because I stumbled over my words a little bit, but got through it nonetheless. So that's the S&P. The NASDAQ's a little bit of a different picture today. And as we speak, obviously, I recognize that the market's still falling. At one point today, after the 2 o'clock hour, actually, it was right at the 2 o'clock hour, we were trading at a little over 2062. Now we're at 2055, as low as we're at 2055. So we sold off about 7-8 points, And but the Nasdaq's holding up good, and part obviously because of the Apple trading higher. Apple comprises like 20% or so last time I checked of the Nasdaq. So if Apple's doing good, there's a good chance that the Nasdaq's going to be following in its footsteps. So yeah, that's pretty good, and that's also good for the market too. That the Nasdaq's not falling in unison with the rest of the market. It's good for tech stocks. And the one thing that it's doing today that the S&P is not doing is it's making a higher high. This is broken right here, and so unless it can't hold it into the close, that's a very good sign going into next week. The Russell, I talk about the Russell every week. It's usually the same thing, but it's not making a higher high. It's pretty good ways off right now, and the theme is still the same. It's stuck in a box. It just can't get out of the box, and it's been doing that since January of last year. So we're a full year into this sideways movement in the Russell. If the small caps would ever join the market rally, you could have a pretty impressive year of trading to the long side, but that's not the case right now. Let's look at oil, because oil is, of course, on the forefront of everybody's mind, because it does drag down the market, and essentially it's what's dragging the market down in the last hour or so. Oil on the day is down, we say only 1.7%, but nonetheless, it's trading at $45.50 a barrel, and that's pretty low. I mean, you look at where the futures were at last night. The oil futures were trading at $47.80, so it's like $2.30 off its highs just from last night. So it's a perpetual sell-off that we have seen so far. Looking at the 30-minute chart, the downtrend is still there, it's still going on. And today, for the most part, except for just a couple of moments, it's just been uber bearish. So I think there's a chance you could see possibly a little bit of a bounce into the close here. I'm sort of curious what this thing looks like on the hourly chart, because I haven't looked at that. What about the 2 hours? Yeah, nothing too compelling about that. But nonetheless, though, I mean, that's weighing on it. Halliburton, a stock that I got out at yesterday at like 40.80, I believe. It's trading higher today, but you could see where oil has taken its toll on this stock as well today, because this Halliburton was trading around 3%, got rejected at the 50-day moving average, and it's just been perpetually selling off since the morning hours from earlier today. I think it, with oil, it's good as long as it's going in your favor right now, right? So I traded Halliburton because it was setting up nicely. Oil looked like it might be forming a short-term base. Obviously, it's not, but at the time it did. And then yesterday, when the market opened, oil just started tanking really hard. So what do? I have about 1% in gains on Halliburton. Do I hold the stock and let oil continue to tank and possibly take Halliburton with it, or do I just take the gains and say, you know what, I'm not going to fight the tape on oil, because I know Halliburton is still going to trade according to how oil trades. If that wasn't the case, it'd still be trading up in the 70s right now. Instead, it's in the 40s. Why? Because oil tanked, and it's taken every oil stock down with it. So when oil can't hold it and oil starts breaking its base, I don't care what I think about the Halliburton chart. I'm going to get out, okay? And yeah, it's great that it's up today, but this is what you're fighting right here. You're fighting a stock that cannot form a base and make any kind of concerted effort to get out of that base and move up. So let's look at the monthly chart on oil, because it's pretty astonishing. So this goes back to 2007, but the points of interest on this chart is July of 2008, when it started its sell-off. I mean, this was like 8 consecutive months, one after another. Now let's zoom in on the latest action. Well, after that, maybe back up. After the bottom with the market in March of 2009, you just basically have 5 years of pure consolidation in oil. And then all of a sudden, in the last 8 months, it has just fallen all over itself. So you got about 7 months right now. So February, if it finishes lower again, it would match this huge sell-off from not size perhaps, but it would match it in terms of length of 8 months. So it's really a fascinating chart. I mean, I think it's going to bounce. I think obviously it has to be closer to a bottom than it is to where it started selling off at. But at some point it is going to bounce. It's going, and I hope I can get into some of these oil plays when it does bounce, because the oil plays will be great. I mean, they'll probably move in 15-20% clips on a weekly or monthly basis, and it will be great. But until it does, I mean, if oil doesn't want to cooperate, you got to get rid of the oil stocks. So look at silver here. This is another interesting chart that I came across today. Double bottom breakout here. First bottom came up, second bottom, and then it broke out. Beautiful. Now it's struggling with a 200-day moving average for like 2 days straight, but it's not breaking down. So that's a good thing, okay? It's holding this 5-day moving average. It's not breaking down. And if it can get above that 200-day moving average, you have actually possibly, that's too many words there, too many actuallys, but you have a pretty good trade setup here. You get above the 200-day moving average, which right now it's like at what is that? 1772 or so. Okay, it gets above that. You can get long at 1773. Put a stop loss below 1731, and you have a good risk reward setup there. And then if the stock continues to improve and everything, just ride this 5-day moving average. This 5-day moving average has been spectacular. Put it 4 or 5 cents below the 5-day moving average, and go from there. It looks spectacular, and one worth trading if it can get over that 200-day moving average. And the fact that it hasn't been rejected hard by the 200-day moving average is a very good sign. It just can't push through it. So the longer that it can stay just below it, the more likely that it's going to break that 200-day. And then we got, I mentioned this briefly, but I'll come back to it. I really like Apple. I thought about getting into it today. It probably would have been the better of the 2 trades that I got into. Nonetheless, it's broken this descending triangle pattern, and that's a very good. I think it's probably going to go up to back into the 120s again, or I don't think we actually ever did get into the 120s before, did we? Let's see, high. No, we never got to 120. It got up to like right at 120, but I think it'll actually get to the 120s this time. The chart looks really good on it. It's trying to essentially establish a higher high on the day, on the daily chart. So if that happens, that's even more ammunition for the stock to continue to push higher in the weeks to come. A couple of trades that I was looking at, but I did not buy today. MRVL. Glad I didn't get into this one. It was tempting at the time, like 1575. It looked like it had the potential to really break out of this flag pattern. What really lured me away from it is that the semiconductors have been very, very inconsistent lately. You look at XLNX. I mean, horrible chart, and just a myriad of other ones. This was another one I was looking at 6% today, while Marvel is obviously down quite a bit. So that was what sort of lured me away. The semiconductors they've been pretty inconsistent, and I didn't want to play that. LNG was looking a little bit better earlier today, obviously, because oil hadn't run its course yet. But what you have now is on the 30-minute chart is this like head and shoulders pattern. If it can hold it together, and let's say next week or so it can get back above 74.28 or so, you actually have a pretty good bull flag trade setup here. Right now, it's not the time to trade LNG, but if it can get back above that 74.28 level, you have a potential for a nice breakout. And obviously, like I said earlier, you want price to action on oil to be at least stable, okay? Because these oil stocks do seem like they want to pop as long as oil just stays stable. But as soon as it starts dropping, so does these oil stocks. And BMY. This one's been intriguing me some. It's actually kind of similar to the MRVL, except they're completely different industries. But you have like a pullback to support here. It's consolidated, and it's looking for a bounce. What's a little bit troublesome is though that we've been rallying, this stock has done absolutely nothing. So, for me, what steered me away from BMI was the fact that, do I want to go after a stock right now that looks like it's momentum building, or do I want to go after a stock that it might not realize that momentum until like a week or two from now. So that was really the difference maker. Some of the positions that we currently have in the portfolio is CTSH. It's been a little bit of an odd stock, but we got in when it broke here. So far, it's profitable for us. I like for it to be a little bit more profitable, and then it has this wicked, doji candle here that it has today, but that doesn't really bother me too much because I see on these breakouts all the time, like right here. Perfect example, October 29th. Gets it, it'll spook a lot of traders out of their positions, and then it just keeps on rallying. So oftentimes they're not that kind of like red candle like that. It'll actually be a sign that the stock wants to keep on rallying. And I actually don't even plan on selling out of any of my positions today. This market itself hasn't really spooked me at all. I've already gone over that in depth with the S&P 500. And I keep talking about Halliburton. That's why my fingers are just magically typing in Halliburton for no apparent reason. Okay, BSX. Another trade we got into yesterday. We got into it at 14.54. It since has broken out really nicely. It was over at $15 at one point. At this one, as long as it can just hold on to most of its gains on the day, I'll be pretty thrilled. I mean, if it can get back above break even on the day, that'll be great. So 14.93 or higher, that would be awesome. But I'm pretty content with it just consolidating today. Allstate. The only thing I know a lot about Allstate is the fact that the guy from 24, who used to be the president on that show, 24, is their spokesman now. So when I hear Allstate, that's what I think of. But it's broken out. It's holding the breakout level. It looks pretty darn good. It's not going anywhere. PepsiCo, whatever you want to call it. Same case. It's holding its breakout level. The chart looks really good on it. I'm optimistic about it going into next week. So yeah, overall, I like the look of our portfolio today. We added an additional position as well. That one's holding up as we speak. The market's selling off, but none of our positions are really breaking down. So that's always a good sign. When the market sells off, you have long positions. You don't want your long positions to give up all its gains after a big day like we had yesterday. So that's going to do it for today. Hope you guys all have a fabulous weekend and take some time to relax, get away. Don't think about the markets at all. Just enjoy time with family and friends. And I will see you guys on Monday. If you guys are interested in subscribing, and okay, this is the one exception, do it over the weekend if you have some time. Sign up for a free trial of the SharePointer Splash Zone. You get everything for free for 7 days. If you like it, keep it. If you don't, cancel it. But you get access to me. I'm in the chat room every day from around 9 o'clock-ish to 4 o'clock. I answer your questions. If you have any ideas, I'll look into them. Plenty of trades comes from member-generated ideas. And yeah, you have me in there, and it's the finest body of traders anywhere on the web. Some great people. People aren't standoffish or rude or anything like that. So give it a try. You also can get my trade alerts sent to your phone via text. That's also for international traders as well. And then you can also get it via email. So, and if you want, you don't have to do any of that. You can just auto trade it through like a auto firm like Ditto Trade. So, got any questions? Send it to me at ryan@sharepointer.com. Take care and God bless.